The question is, can you have a deal that ends the war in Ukraine while at the same time have these trade deals that essentially have the United States seizing basically for the foreseeable future that Russian market share? So I do think that's an interesting conversation about like these two deals, a trade deal and a deal to end the war. Are they potentially in conflict?
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abax Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, battery materials, and precious metals markets. Smarter markets are here.
Welcome back to Summer Playlist 2025 on Smarter Markets. I'm Dave Greeley, Chief Economist at Abax Technologies. Our guest today is Helima Croft, Managing Director and Global Head of Commodity Strategy at RBC Capital Markets. We'll be discussing the state of the ongoing conflicts in Ukraine and the Middle East today, how and why the Trump administration may be turning to tariffs and trade deals to reduce Russian energy exports, and the consequences for energy markets and prices going forward. Events are always moving quickly when we talk with Helima, and this time has been no exception. So we'd like our listeners to note that this conversation was recorded on August 6th, 2025, before the recent talks between President Trump and Presidents Putin and Zelensky. Hello, Helima. Welcome back to Smarter Markets.
Thank you so much for having me.
Always love to have you here. I've realized that every time we talk, a geopolitical crisis is not far away. I'm hoping that we're breaking that streak today, but I don't know. Anything on the horizon?
Every time we talk, there's something on the horizon, whether it be military action between Iran and Israel and the United States, which has happened multiple times since we have talked, David, right before we've had this conversation. And then we're looking at right now the question of, will the United States for the first time really take meaningful action to try to reduce the scale of Russian energy exports? I mean, we've done plenty of things in terms of targeting other sectors of the Russian economy. Certainly, we've done price caps on Russian oil, but we can have a conversation about that. I really think that was designed to keep Russian oil on the market when the EU moved forward with the sixth package of sanctions and essentially locked out those barrels from Europe. The question is, will President Trump on Friday announce measures that at a minimum cause India to pare back their Russian imports? So I think this is a really consequential story. We have to see if at the last moment President Trump says, okay, I'm going to do something else that looks like it's serious when it comes to energy. Certainly, I think they have the capacity to potentially get a country like India out of the Russian import business because of the fact that refineries are so integrated into the global financial system. But it remains to be seen whether President Trump will really pull the trigger this time.
Well, and I'd love to dive right into that with you because to me, it's so interesting in that President Trump has a much more confrontational style on the global stage. He has not in the past been confrontational with Russia. That's been kind of an interesting exception. And it seems recently that's changed. There's been like the movement of US naval subs, this potential putting of tariffs on India. And as you've said in the past, the US, whether it was the Trump administration, the Biden administration, they turned a blind eye to people taking Russian oil because it was necessary for the global economy. So what's going on?
I love to take your last point on that because it's such an interesting question. Did the Biden administration turn a blind eye, or was it by design that Russian barrels stayed on the market? And I think if we just go back to the days after the Russian invasion of Ukraine, I mean, the Biden administration made a clear choice to sanction everything but energy supplies, at least energy supplies, in the near and immediate situation. They did things that could impact Russia's ability to grow production at a later date, which I think may be kicking in now. But the real concern was preventing a Russian supply disruption that would cause prices to rise in a way that it would hurt the US consumer. I remember a senior Biden administration official at the time said, we want to hurt Russia, but not ourselves. And so we think about the effort to do carve outs. Remember when we targeted the Russian central bank for the first time a G20 central bank had actually been sanctioned? We did carve outs for energy deals. We did plenty of things and we targeted Russian banks and we disconnected them from SWIFT payment system. Again, we allowed energy transactions to continue. And remember, we did that incredible release from the SPR. There was no supply disruption at the time, but we still released barrels from the SPR, like 1 million barrels a day, to keep the market well supplied. So again, I think it was a design policy to keep these barrels on the market. And again, we bring up price caps. I mean, the Europeans did go forward with pretty significant sanctions, and the US was very concerned about a potential supply disruption. And that's why the US did price caps. Again, it was designed to keep Russian barrels on the market.
Has the calculus for the US changed, right? The US, huge oil exporter, huge oil producer, big gas. The US really is a fossil fuel superpower right now on the global stage. Are US interests tilting a little more towards somewhat higher prices would be in a national interest?
So this is such a great question because, again, in the early days of the Russian invasion of Ukraine, people who wanted very tough sanctions on Russia that would be commensurate with what we did with Iran. Remember, with Iran, we did put secondary sanctions on Iran, on energy exports of Iran, and we really drove down Iran's ability to sell into key markets. And people were saying at the time we should do something similar to Russia, that this US resource endowment gave the United States an opportunity to really sanction countries in a way that we couldn't do before. But again, we made the decision at the time not to go forward with very serious sanctions on Russia that would cause a supply disruption. I mean, again, I talked about all the institutions that were sanctioned, individual Russian banks, the central bank. Notice we never put secondary sanctions on Gazprom, on Rosneft, the major Russian energy companies. And the question is, has President Trump decided that now is the time to go forward with measures that would really potentially remove, if you look at India, they've ramped up to 1.7 million barrels a day of Russian energy imports. Like they were one of the big countries that took the supplies that were no longer going into Europe. Will India essentially become the target of a serious US effort to say, you must reduce your Russian imports? And again, that could have some significant impacts for prices right now. We're talking about fourth quarter that looks like it's going to be either amply supplied or significantly oversupplied. If we were to see a material drop in Russian exports, that could change the conversation about the fourth quarter in terms of prices. So again, does President Trump have the appetite to potentially deal with higher energy prices in the near term in order to send a signal to the Russians about the desire of the United States to bring this war to an end?
And recently you were in Vienna for the OPEC seminar. And I'm curious, how is OPEC thinking about this? Because leaving aside the war in Ukraine, Russian oil has always been a concern to OPEC. They want to support prices in the zone that works for their member countries. It's kind of an interesting calculus now that the US may be helping get some Russian oil off the market potentially.
Well, it's an interesting calculus because we have Russia as the OPEC plus co-chair. And remember when this declaration of cooperation was announced at the end of 2016, people didn't know if this arrangement between Russia and the OPEC producers would work. Was it a shotgun marriage driven by shale? Was it built to last? And there have been moments when the partnership was seriously imperiled. If you look at the spring of 2020 with that meeting that dissolved without an agreement, and then we had that temporary price war between Russia and OPEC during the early days of the COVID pandemic. But since they got back together, the relationship has been pretty strong. And so the question is, what type of action would OPEC want to take if we have some type of disruption I don't think they want to be seen as enabling a coercive US sanctions policy against the OPEC plus co-chair. So I do think that we've had periods where OPEC has signaled a willingness to put on barrels if there's a serious supply disruption. Like if there had been serious action in the Straits of Hormuz, for example, earlier this summer, I do think we could have seen action around this 1.6 million additional voluntary cut that they could bring back. But again, if we're talking about simply backfilling a sanctions driven disruption, again, targeting the co chair of OPEC Plus, I just don't think that the OPEC leadership necessarily wants to wade into this dispute between the United States and Moscow. I think they would like to stay very much on the sidelines if they can. I don't think this is a fight that they want to insert themselves in.
It's a great phrase, insert themselves in, because I find like what's been really interesting, as you and I have talked over the past couple of years, as we said, there's always been a relatively startling crisis developing. But we seem like we're kind of ourselves and the world at large is acclimating almost to this kind of steady stream of confrontations between countries that seem to have the potential to increase into a much wider geopolitical event. We have this increasingly confrontational style in international relations, both with open conflict, the use of tariffs by the US. And I wanted to ask you about that because I think that acclimation and the way that others are not inserting themselves. So, like, maybe start with Russia and Ukraine, right? Like, they're still fighting. It has not been resolved. It's fascinating to me that that continues to go on. And we see kind of like the localized pain and suffering, but Europe seemingly moved on. The US has moved on. Now we have the President Trump potentially changing his attitude and stance towards Russia. Do we see any drive to try to end that conflict from the parties outside of Russia and Ukraine? Is that part of what we're seeing with President Trump?
Well, remember, President Trump campaigned on bringing this war to an end. You would talk to Trump campaign advisors before the election, and they said, look, hundreds of thousands of people are dead. Billions of dollars have been spent on this war, and yet we're no closer to having an off ramp. That we essentially have to make a serious, serious effort to bring this war to an end. And initially, everybody thought that the playbook would be essentially telling President Zelensky, like, we're closing the checkbook. You need to make serious concessions to the Russians, territorial concessions, essentially allowing Russia to keep the territory that it has claimed, essentially having a deal whereby which Russia would basically freeze where they are now. Like people thought that was the path to a deal. And what has been so interesting, in the last couple weeks has been the apparent effort now to really apply pressure to Russia. Again, I remember with a confrontational meeting between President Zelensky and President Trump in the Oval Office, and everyone thought, okay, this checkbook is closing. Now, for the first time, President Trump seems really upset at Vladimir Putin, as is saying to Vladimir Putin, I may put a serious dent in your ATM. I mean, think about what has allowed Russia to continue to fight this war has been the revenue it's continued to receive from its energy exports. And I can tell you there has been a view in a certain community in Washington that said, from the start of the war, I think about Robin Brooks, who's at Brookings Institution. He's been really great on this issue, someone to have on your podcast. And from the beginning, Robin Brooks was saying, like, if you allow Ukraine to have access to the advanced weaponry they're seeking, while at the same time allow Russia to continue to export energy, that is not a short war scenario. Like, that is a scenario for a protracted military conflict. And that's where we really look like we are right now, is that essentially one side had reduced revenue, but still significant enough to fund the war machine, and the other side had access to weaponry. And so here we are right now, we're in this sort of stalemate situation.
And what do you think might break up that stalemate? Are there certain signposts or actions you're looking to happen or not happen over the next few months?
I do think we really do have to watch what evolves on the sanctions policy from President Trump. Like if we were to really signal a willingness to go after the Russian balance sheet, that could potentially change the calculations. If we think about Ukraine as well, like what are we going to be providing in terms of military equipment? That to me is going to be very interesting in terms of like what are the dynamics of the US when it comes to both sanctions and when it comes to weapon supplies. And then also when it comes to Europe. And I think bringing it back to energy beyond sanctions, I do think this deal that the United States and the EU just announced, this trade agreement with the 750 billion in purchases over 3 years of energy, undisclosed energy, and a lot of people are saying, "Oh my gosh, that's wildly ambitious." But if we say that we don't know how we're going to get to 750 billion, maybe that's again very ambitious. What we can say is we're anticipating more US LNG at a minimum will be going into Europe. And the question is a deal that essentially cements the loss of Russian market share. And you think about it, like, what are the US cargoes going to replace? They're going to replace likely the remaining Russian LNG imports into Europe. And so the question is if you're Vladimir Putin and if you're looking at President Trump prioritizing US energy exports into your most important market, are you going to settle this war? Because one of the issues from the standpoint of the Russians is we all suspect that a key condition of at least freezing the conflict would be getting sanctions relief. And we do think that they're going to want access back to their most important market for energy. And so the question is, can you have a deal that ends the war in Ukraine while at the same time have these trade deals that essentially have the United States seizing basically for the foreseeable future that Russian market share? So I do think that's an interesting conversation about like these two deals, the trade deal and a deal to end the war. Are they potentially in conflict?
That's such a great insight because people can look at the 750 billion and just say, well, that's just a crazy number. But it's a number that definitely, as you said, says without saying it that the door to Russian energy imports into Europe is closed. Because if they're going to be buying that much from the US, there's simply not room to go to Russia for more.
We do have a significant expansion in US LNG export capacity. And so every time European officials come to Washington, they talk about the fact that they want to be a buyer of more US LNG cargoes. And the EU has just announced, I think by 2027, their goal to completely move off of Russian energy. And so, really, LNG has been one of the remaining Russian flows into Europe. But again, those cargoes look like the ones that are going to be the primary takeout by US imports is going to be those Russian LNG cargoes.
Well, let's turn now to Israel and Gaza. I kind of want to make sure we hit some of the major events we've touched on and get your viewpoint. I think the last time you and I talked was before the US election, and you had mentioned that Israeli Prime Minister Netanyahu might use that period before the US election to kind of try to run the table with his adversaries. And that conflict continues to go on. And I'm curious, what do you think his strategy is now? What's he trying to accomplish?
Do you think this is such an important conversation to have? Because we have had now, and we talk about President Trump's willingness to roll the dice, the fact that he campaigned on essentially no more US involvement in forever wars in the Middle East, looking to scale back the US footprint in the Middle East militarily. And we've just had, in June, the United States helping Israel bomb the Iranian nuclear sites, Fordow, Natanz, Isfahan. And yet we didn't have a price run up. But that was a gamble by President Trump, his willingness to actually go in there and support that Israeli action. I mean, it did run the risk that the Iranians would retaliate by targeting tankers in the Straits of Hormuz. We never thought they could close it, but ran the risk that they could target individual tankers, that the Iranian-backed militias in Iraq could target infrastructure there. And President Trump sort of rolled the dice on that. I think the question really is now is, has that conflict been parked for now? Or has Iran been able to take out of one of these targeted facilities enough highly enriched uranium, enough of the high-speed centrifuges that they could potentially reconstitute their nuclear program at a later stage. I mean, was it mission accomplished completely when it came to derailing the Iranian nuclear program? Or are the Iranians looking to sort of go to ground and clandestinely reconstitute the program? I think that is the risk. If you think that we could have further military action, it would be because the strikes in June did not totally disable the program, and the Iranians retained the certainly the knowledge about how to reconstitute the program, despite the fact that a number of Iranian nuclear scientists were actually targeted as well. So I think we can't totally say that that conflict is done, but we don't know because the access of international inspectors down to those facilities is going to be limited. We don't know what the Iranians could be doing clandestinely when it comes to that program.
Yeah, and maybe that's the more interesting question is what is Iran thinking? Because I think it was surprising that their response to the US strike was so muted. And then at the same time, for years, it seemed that Iran had its network of surrogates. So it had Hamas, it had the Hezbollah. Those have really suffered recently.
The loss of Syria. I mean, that is, I mean, for the Iranians, I mean, they are fundamentally weakened in a way that was inconceivable when just a year ago. I mean, the loss of Syria, the way they would actually run their weapons to their most important proxy in Lebanon, Hezbollah, the fact that the Hezbollah leadership has been decimated, the fact that, Hamas has suffered such significant losses. The Houthis in Yemen still retain the capacity to strike Israel. You still have these Iranian-backed militias in Iraq, and we did see Kurdish fields recently targeted, and you've had Kurdish energy officials saying that material damage was done to those fields. But to me, which is fascinating, is if those militias became active targeting Iraqi facilities in the north now, like they didn't do anything during the Iran-Israel war. And so the question is, what does Iran have left in order to project power, to restore any measure of deterrence? I mean, the Israelis showed they have complete air superiority over Iran. The degree of intelligence penetration is just startling in terms of how the key military agencies were infiltrated, the scientific community was infiltrated. And so what we are hearing is that what's going on right now is a real counterintelligence operation in Iran targeting anybody suspected of aiding the Israeli intelligence services, primarily Mossad. And so the question is, once they have, finished this, incredible purge that will sweep in many innocent people, what do they do in terms of the nuclear program? What do they do in trying to rebuild air defenses? Do the Russians assist them with the reconstitution of the air defense systems? What do they do on the nuclear front? These are the big unknowns. But what we do know, David, right now, again, is that there's a tremendous purge going on to try to find who was assisting the Israelis. Because again, this was such a startling intelligence failure on the Iranians' part. They were so deeply penetrated by the Israelis.
And I think one of the fascinating thing, bringing it back to energy markets, is, as you mentioned earlier, energy prices have not reacted to recent events the way they would have in the past or how one might expect. It's been such a muted response. Why do you think that is? And is this what we should expect going forward?
I mean, David, we're going to show our age right now. It's going to be, it's like spoiler alert. But do you remember when we'd have these incredible run up in prices? Like I think about on the precipice of the financial crisis when I think oil was like above like 130. We had very, very thin spare capacity. Remember that period? I remember when like the Mend insurgents in Nigeria got close to like attacking the offshore Bonga platform and oil prices went parabolic. But that was also because we had razor thin spare capacity. We're not looking at razor thin spare capacity anymore. We can talk about like the shale revolution and what changed in terms of the global supply picture. So we are a more amply supplied market than we were when we would have like really, geopolitically driven price shocks. But also we haven't seen since the Russian invasion of Ukraine, that big run up that happened then was in anticipation of a supply disruption that did not materialize. Because again, the United States, as a deliberate policy, decided not only not to sanction oil, but to do the big release from the SPR, essentially drawing our SPR down by half in order to keep the market well supplied. And a lot of people got very burned. A lot of the traders that we see every time we go to Lausanne, Switzerland in March, number of people in that community got burned betting on higher prices that just did not materialize. And so when they turned their attention to the war in the Middle East, as soon as it became clear that there wasn't going to be a material supply disruption from the Israel Hamas war, they said, call me when there's a disruption. And even with the Israel Iran conflict, the 12-day conflict, the Iranians just avoided targeting infrastructure, energy infrastructure. They avoided doing what they did in 2019. Remember, after the US imposed or ended exemptions for importers of Iranian oil, really imposed maximum pressure sanctions, the Iranians started targeting tankers off the coast of Fujairah in the UAE. They hit the East-West pipeline with their proxies, the Houthis. They then did that dramatic attack on Saudi Arabia's Abqaiq facility, the world's largest oil processing facility, September 2019, taking off temporarily half of Saudi's production. Like the Iranians showed that they were willing to target energy infrastructure then, but they decided to take a pass on it this time. And so I think a lot of people now say, if you would have told me Israel and Iran would be targeting each other with missiles and there'd be no supply disruption, I'd tell you were crazy. And because it happened, I think it's not going to be priced in any real risk in the Middle East until there's something that really impacts supply. And so bringing it back to where we started the conversation with Russia, are we actually going to see something now in Russia where the United States does take action to limit, at least into a key market like India? Because India, when we previously targeted Iran, they did pare back their imports. They talked a very sort of nationalistic game in advance of that. But if you're essentially saying to a refinery like Reliance, like, do you want to continue to do business with, U.S. regulated institutions? Reliance is like, I'm going to do business with U.S. regulated institutions. And so if the United States was serious about sanctions that could drive India out of the Russian oil business or, Russian import business, they could do that. The question is President Trump going to take that move? Or at the last moment, is he going to say, I don't want to deal with a price increase. I want to basically park this conversation on oil, just like everybody else has done when it comes to Russian energy.
So the potential for supply disruptions hasn't been driving prices the way it has in the past, hasn't driven volatility the way it has in the past. Then there's the issue of the tariffs, right? So we have this much wider use of tariffs, a lot of uncertainty, a lot of risk. We've seen it create wild moves in some commodity markets, like it recently has in copper. I'm curious, how do you see it affecting the energy markets, if at all?
If you think about beyond simply the situation of like, are we going to have potentially more oil than we need in the fourth quarter, which I think the biggest debate right now in the market is like what happens in Q4 with the oil picture. But a big macro worry has been a China slowdown because of tariffs. And that has just been since Tariff Liberation Day, like that has been a big headwind for oil, has been the concern about the overall macro impact of tariffs when it comes to demand. But then on the flip side, the use of secondary tariffs to target the exports of a key energy producer like Russia, that is the kind of flip side. There's the obvious bear case for tariffs, which is a demand hit. And then there's tariff as sanction, which is what we could be seeing with Russia, tariff as secondary sanction. That could be something, again, that could, at least in the near term, cause a drop in Russian exports to a key market, India. Again, I think it'll be harder to get China out of the Russia trade, but certainly I do think that India, if the United States was really serious about saying to India, we are going to demand that you make a significant reduction, and those refineries that do business with U.S. regulated institutions could be in the crosshairs, I think you could see a significant drop in Indian imports of Russian oil.
And I want to come back to China with you, but I wanted to ask you first, because one of the concerns with tariffs is always how will other countries respond when one country starts to use them? And much the same way that we haven't seen other countries kind of insert themselves into these conflict areas, we haven't really seen a strong response from other countries to the US tariffs so far.
Or we haven't had the mutually assured destruction scenario that people were afraid of, to bring the arms control parlance into this tariff conversation. So I think what you've had like maximalist statements from President Trump. And then you've had the effort to try to sort of off ramp it and reach negotiations. And so I do think also that's why market participants are not reacting to the tariff announcements the way they did initially, is because they see the announcement as a sort of opening salvo in a negotiation efforts. And so I think that's also why people are now a little more, I wouldn't want to say complacent, but there's like a watch and wait strategy now when they're really digging into these tariff announcements, like waiting to see what really comes in terms of negotiations.
And I wanted to come back to China now because seemingly China seems to be relatively quiet recently. And I'm curious if that's been your impression. And where is China in all this of what's happening geopolitically around the world right now?
Again, we're really waiting to see what happens in terms of the tariff negotiations. I mean, there had been some conversation right before President Trump took office that the Chinese would ultimately get into the bazaar with President Trump, and there'd be some deal where China would come in and say, okay, we're going to supersize our US energy purchases. We're going to do more in terms of soybean purchases, like coming in with the kind of things, manufactured goods, potentially like a big Boeing purchase, and be able to create a deal with President Trump that they would be very, very transactional. So we are still waiting to see how this conversation evolves. But I think the geopolitical story that you might be sort of hinting at is, as President Trump has become drawn into conflict in the Middle East in a way that we could not have anticipated when he took office, as he's now turning his attention more seriously to targeting Vladimir Putin, is China sitting back and saying, okay, like, while President Trump is dealing with other crises, should we think about expanding our footprint in South China Seas? Should we think about, a move on Taiwan? Like, I think that is what the people who watch geopolitics as related to China, they're kind of imploring us to continue to keep our eyes on those stories, keep an eye on the Taiwan situation, South China Sea situation. So again, I think that is a story that we will pick up probably in our next conversation.
Well, I'll look forward to that. And I really appreciate you sharing your insights as always and really helping us know what we need to be keeping our eye on around the world. Before I let you go, though, I wanted to ask you, this is our summer playlist podcast series. And one of the things we've always done with our guests is we like to think of these podcasts as a little bit of light beach listening for people if they're able to get out of the office for a week or two in the summer. And we like to ask each of our guests what's on their beach reading list. So I was curious, if you have the time, what are you reading this summer, Helima?
Well, you know what I'm doing? I'm catching up on I have a stack. I'm a member of the Council on Foreign Relations. Like, one of my formative experiences when I was leaving the intelligence community was I was a fellow at the Council on Foreign Relations. And every month, we get our foreign affairs. And so I just have a stack of unread foreign affairs. And I've basically been like hauling those foreign affairs, the blue, I call it my little blue foreign policy Bible. I'm taking those to the beach with me. So my beach reading is, trying to catch up on my foreign affairs.
Thanks again to Helima Croft, Managing Director and Global Head of Commodity Strategy at RBC Capital Markets. We hope you enjoyed the episode. We'll be back next week with another episode of Summer Playlist 2025. We hope you'll join us.
This episode is brought to you in part by Abax Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, battery materials, and precious metals markets. Smarter Markets are here. Contact sales at abax.exchange to get started. That concludes this week's episode of Smarter Markets by Abax. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abax Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.